The question on everyone's mind: is the U.S. economy heading for a major crash, or are we poised for a massive pump in growth? Let's analyze the current outlook. Understanding the direction of the U.S. economy requires a close look at the data, the signals, and the forces at play. We'll break down the conflicting evidence. Currently, the U.S. economic climate is characterized by significant volatility and mixed signals. We see strong employment, but also persistent inflationary pressures. The uncertainty in the market stems from several key factors, including geopolitical risks, the Federal Reserve's actions, and shifting consumer behavior. Let's first explore the arguments supporting a potential economic crash or severe downturn in the near future. One of the most concerning indicators is the continued battle against high inflation, forcing the Federal Reserve to aggressively raise interest rates, which slows economic activity. Traditional recession indicators, like the inverted yield curve, are flashing warnings, suggesting that a slowdown or contraction may be on the horizon. Elevated levels of corporate and consumer debt pose a significant risk, especially as borrowing costs increase, potentially leading to defaults and reduced spending. On the flip side, there are strong arguments and data points suggesting the economy is resilient and set for growth, a potential pump. The U.S. labor market remains remarkably robust, with low unemployment and consistent wage growth providing a strong foundation for consumer stability. Despite economic anxieties, consumer spending has shown resilience, often fueled by excess savings from the pandemic era and rising wages. Large-scale government initiatives, particularly in infrastructure, clean energy, and manufacturing, are expected to inject significant capital and spur economic activity. So what does this all mean for the immediate and long-term future of the U.S. economy? Let's review the consensus. Analyst consensus leans toward a soft landing, a manageable slowdown without a deep recession, though the risk of a harder contraction remains elevated. The U.S. economy's long-term strengths, including innovation, demographic vitality, and strong institutions, provide a robust foundation for future growth, regardless of short-term volatility. In conclusion, the U.S. economy is at a critical juncture, facing both strong headwinds and tailwinds. The outlook is balanced. A potential slowdown is likely, but outright collapse is less probable due to underlying economic strengths. The key is to remain agile. Ultimately, whether we see a crash or a pump, staying informed about economic indicators and maintaining a diversified investment strategy are your best defenses.